Hello everyone. Now let's analyze the current movement of gold. On the 30-minute chart of gold, it is in a range-bound movement. Then we look at the lower level chart. On the 5-minute level chart, we can see at this position it is undergoing a level expansion. Why does level expansion occur? Mainly because the previous consolidation zone and the later consolidation zone have overlapping price ranges in their fluctuations. When we do technical analysis, let me mark it first. This is consolidation zone A, and this is consolidation zone B. The fluctuation ranges of the two consolidation zones are 5,379 and 5,380. That is, today's highest rise reached the price of 5,380, and this price formed Opris overlap. This indicates that on the 5-minute chart, according to technical theory, it will undergo a level expansion move. If according to technical theory, a relatively normal trend we need to analyze carefully here, it should be fall, rise then fall again. Then we look at the 30-minute chart. This downward stroke movement may not necessarily break below the previous low. If it is a weak market, it falls downwards and could also break below the price of 5,261. This is a weak market scenario. There is another scenario. I'll mark it in purple. During this downward stroke, it does not break below the previous low of 5,261, and it continues to range bound here. Then the level expands to the hourly level. That is to say, the current market situation is quite complex. In previous videos, we repeatedly analyzed and explained using technical theory that gold is in a high-level range bound on larger levels, and the time is not enough yet. It needs time for high-level consolidation. So how do we deal with it here? At this moment, it tests our position management, self-control ability, and operational skills. I always keep a base short position through several replacement trades of the base position. My cost has been moved to this level, and today between 5,375 and 5,380, I only placed a small short position. The price was at 5,376. So here, it belongs to intraday trading orders. Our position cannot be too large. The ones that can truly have relatively large profits are your large base positions. My large base position is at this level. The position size at 5,376. I can only open 3 lots or 0.2 lots as a new position. That is, small position orders for intraday trading. Now we can only wait for the market to evolve. If the market movement expands here and then turns upward again, could this possibility occur? It is also possible because the market is changeable. So let the market evolve on its own. Technical analysis is not about predicting, but we need to follow market changes and adjust our own positions and strategies. Also, you cannot take a disorderly and changeable movement and fix it or standardize it. This is a fact we often mention. Respect the market, fear the market. So here, let's wait patiently. Let the market complete the entire level. Then let's take a look at the quarterly chart. The first quarter of this year is not over yet. There are still over 20 days left. What about the monthly chart? March has just begun. If the monthly movement does not exceed the previous historical high of 5,595, that is this position. If it does not break above this new high, let me remark it. Then it will look for the next low. That is to say, whenever we do any trading, we must follow a principle. Any movement at any level is a process of making new highs and new lows. That is, the constant evolution of highs and lows. This is something we need to deeply understand. This is a deeply ingrained and unchanging principle. That is to say, any chart, any level, it is composed of highs and lows, and there are continuous new highs and new lows. So how should we trade and operate? At positions where new highs and new lows appear, choose to go long or short. Currently, for example, I opened a new short position at 5,376. The movement level of gold is 5-minute, but on the 30-minute, 2-hour or daily charts, no new highs have appeared, so I cannot take a very large position, nor can Ito position replacement. For intraday trading, I usually do small position trades. Small position trades, looking at the 5-minute or 30-minute charts. It can also be said to be small level. For example, at this time that is here, I need to remind everyone of one point. When we place orders, corresponding to what level of operation, we place orders of what size. This morning, these intraday trades need to wait. The normal movement of gold will at least fall back to this area again. After falling back to this area, we will then look at the specific movement, whether the 53.76 intraday small order needs to be closed. We can only think about it later. Let's wait patiently. For silver, its movement is relatively clear. Here, we also need to wait. In my medium-term video analysis of silver, I will not go long at this position. For current silver, let's look at the 2-hour chart. My last large position, a relatively large short position, is at this position of 95.89. Now my overall cost has been raised to 95.16. So, here we can only hold patiently. I will say more about silver. Today's video and intraday trading analysis will end here. See you next time.